Hey, happy Friday, everybody. Happy Aloha Friday from Honolulu. It's about 5:30 in the morning here. We're just rolling into lunch, New York time in about a half hour. Fugly day in the stock market today, huh? You can see, let's pop on over to the CNBC website. Let's go ahead and do that. And share the screen here, pop on over, click a mouse. There you go. You can see COVID vaccinations are slowing as supply outstrips demand. That's a good sign, right? You can slice that any way you want. But really, the truth of that is that people are getting vaccinated. And you're starting to get to the point where in the beginning, you've got so many people you need vaccinated and only so much vaccine. As you get people vaccinated, that clears that side of the backlog and you start having more supply than demand. This is a good thing. So there you go. We're starting to get vaccines into people's arms, and it's a personal choice, but it's a good thing. We're reopening. So next week, Friday, we have a big unemployment report, and we also have a GDP number, revision number, and stuff like that. But for the most part, we'll see how this unemployment number goes. There's a lot of talk about adding 1 million jobs to the economy and stuff like that. We'll see how that shakes out. Proof's always in the pudding. Proof's always in the report. We've had times when these things can disappoint. You look at the market. S&P's just been trickling down from that open, rolling into lunch, down about 32 points. The NASDAQ's down about a little bit under 100, and the Dow 252. There's just not a lot of drive to today. Really, tech earnings on the dollar side were a great earnings season, but on the stock side, it's like everything's getting punished for having good earnings. Tech earnings were kind of a bust, right, for the market, not really driving it to new highs or anything like that. A lot of people expected that, despite blowout earnings, right? Microsoft had great earnings. Apple had great earnings. Netflix had great earnings, except for the subscriber base additions, right? Which when you're making money the way they are, you can handle a quarter with a little bit of slowdown in subscriber growth. Tesla, right, had great earnings. But all these stocks are just getting punished. Microsoft, just got beat up. It started to recover a little today. Apple, right? Apple again, blowout earnings, highlight earnings, and the stock just can't get any footing. We were in a short-term earnings trade, right? We talked about Apple yesterday. We cashed that out. Well, we did the smart thing. We saw this trend happening going into last night's Amazon earnings, and we knew regardless of how well Amazon did. And I think at this point, these second quarter earnings, there's first quarter earnings are expected. We're starting to see that the market expected this. There was a certain amount of growth in the economy that fueled these things. And also, too, you had your normal stocks that did well during the COVID, which were just continuing those trends. Enough just wasn't enough. And you're starting to see it in today's market. We had some oil earnings this morning, right? Exxon, Chevron, I believe, both had good earnings and both gave good guidance, but it's just not enough to push the Dow up. What's wrong with the market, right? Great earnings, economy reopening, everything's coming together, but it's trickling down. Is this a buy the dip? Who knows? Like always, we tell you trade smart. We bought a bunch of Ford this morning. We've been talking about that for 4 weeks, how we wanted to get into Ford, but we were waiting for maybe some kind of opportunity. So we thought we'd wait till the earnings season. If the earnings lit the stock up, we just jump in real quick and get our position. But if there was something in the earnings that the market didn't like, which it turned out there was, we'll use that opportunity to get a position in Ford. So we got it in the low 11s. Perfect. We like Ford and we want to hold Ford for a while. We talked about Ford. Let's talk about Ford a little bit and the psychology of your trading and stuff. Yesterday, we talked about your head as a trader, as a wealth builder. Let's put that into action today. So you look at this Ford earnings report, right? And the big thing, the thing that just tore the stock up yesterday was that they're talking about the chip shortage and how it's going to cut half their production out because they just can't get the chips to produce the cars. But well, let's don't get too far ahead of ourselves here. It destroyed the stock, right? The stock was down like buck and a half at one point. And it just really got beat up. But today it got a little recovery. We haven't checked it for the last maybe half hour, but we'll check it before we end this recording. But think about it. What was the real key thing that the CEO said? The key thing was that they see it in the middle of the second quarter. The trough, the bottom of that pit, they'd hit it, and then it'd be a recovery the rest of the quarter. Well, guess what? We're rolling into March. We're rolling into May. We don't want nothing to do with March anymore. But we're rolling into May, and guess what? That is the middle of the second quarter. So basically, the market heard half production. Oh my God, right? But what the market was told was, yes, it's going to be ugly, but the middle of the second quarter, it's going to start getting bright again. And you're in the middle of the second quarter. So we saw it as a buying opportunity. And that's kind of the psychology, right? Don't let your emotions get in your way. It's easy to get caught up in that and just, oh God, I got to get out of Ford, or, oh, I'm not going to buy it now. By staying unemotional and stuff, you're able to see the truth in that earnings report and in that forecast. So look, guys, it's an interesting day, right? Microsoft got a little bit bullish in the morning, but it just kind of trickled. Apple's just, I don't know what's wrong with Apple. Nobody wants to buy a company that makes $1 billion in profit every quarter easily, consistently beats earnings, has a great dividend, has a great product that's not going away for any time soon. Nobody wants to buy that. We'll buy it. We take it. You guys know us. We own Apple stock and we plan to own it for a while. Other than that, guys, we just kind of took it easy this morning. We talked about it yesterday. We went short on the spider, and that's coming. That's up about 20-25% already. With this push down this morning. That's just a short-term trade, though, guys. We're still focused on the long-term of the market with our energy play that we still have set up. Energy got a little slowed down today. One, it's a market that's kind of soft trickling down, so it's kind of taking everything at least a little bit with it. Plus, oil had a big retrace today. It was down about a buck or so. One day doesn't make a trade. So, we've had 4 days of great energy. We had 1 day of softness. You know what I mean? We'll stick with that trade. We're all the way out to the middle of summer on that trade anyways. Other than that, guys, like I said, we use the softness to get a position in Ford in our model portfolio. So Ford is now an official member of our model portfolio. And we recommend you go take a look at it. You want to get an automaker into your portfolio, that might be the one. You might like Tesla, you might like GM, you might like, what is it? The Chinese one, NIO, N-I-O, the one that makes those electric trucks and stuff. That's an interesting company to take a look at too. Other than that, like I said, guys, we just kind of sat back. We're looking, ideally, we would have liked to tap that spider short out. We bought it out till next Friday. Maybe in the afternoon, we'll get an opportunity to it. The market just kind of came down, went a little sideways, started to bounce, and then it just dropped. And now we're debating whether we should tap that out or not. We'll see. There just doesn't seem to be a lot of drivers now going forward. We're through tech earnings. We're into the generally, this is your energy portion of the earnings season, and you start to get some of your industrials and stuff like that. Other than that, there's just no driver right now. The Biden administration, we're continuing on this big spending spree, which good or bad, the market understands what the economics are behind that. And it's probably got one eye on that. The other eye is definitely on inflation, right? We had the Fed this week again, and basically it just stating the same thing they've been saying for months now. They plan to placate the market. They plan to stimulate the market. They plan to stay on their current buying's binge, and they're not worried about inflation. Inflation will come a lot faster than people think. Inflation, I kind of mentioned it yesterday. It's like recessions. Everybody likes to talk about, oh, we're going into a recession, going into a recession. But the truth of it is, and us old time traders know, you don't know it's a recession until you're in the recession. You can't, they're not predictable and stuff. We saw that, right? Remember the end of 2018, all these analysts were calling recession. The market sold down. Guess what? There was no recession. And then we just went on that hellacious rally into 2019. That's how recessions work. Inflation works the same way, guys. If you're old enough to remember times of serious inflation, because a lot of you young traders haven't seen inflation, right? We haven't seen inflation for a decade, or maybe even more. You haven't seen inflation and how it affects stocks, corporate profits, and things like that. Even your paycheck, right? When they start raising taxes, what happens is, you know, you're paying a little bit more in taxes, and guess what? You're making the same amount of money, and everything's costing you more to fill up your gas tank, to buy food, buy groceries, to go to the movies. Everything's cost more, but you're not making more, and the government's even taking a little bit more. And don't kid yourself, when they tax the rich, it ends up taxing the poor. That's just an unfortunate formula of taxes. They can slice it any way they want, but you can always go back and see all the research that how rich people have a way of protecting their money and stuff like that. And poor people don't have that luxury, right? You don't have a $100,000 a year accountant to manage you through this, right? Now, look, guys, we're not calling for doom and gloom and stuff, just maybe a slowdown in this economy and stuff, and just be aware of it going forward. Always trade forward, guys. Other than that, there's just not a whole lot of drivers out there. So now it becomes the proofs in the pudding economy, where you either start getting these good economic reports, you keep inflation under control, and the market grows, or you don't. And that's where we're getting right now. And the market's starting to face that realization, right? December was a euphoric moment. It looks like April and into May is becoming a come to God moment, where we start facing the realities of what's going on. Anyways, guys, let's, you know, like I said, we like Ford. We're still in that spider short. We still got our energy play going forward. Other than that, we don't have a whole lot on the board right now besides our long stocks. And those are all doing well. So look, guys, if you want to get in with let's talk a little bit about crypto. How about crypto? Last night I went to sleep and Bitcoin was down $1,400. I got up this morning to get ready for the market, and guess what? It was up $1,700. Hey, crypto is crazy, right? And that's, you know, we talked about it. We started, trading crypto with some of our members, and it's been a ride. It's been an education. We had no idea going into Bitcoin. We wanted to learn while we earn, and build our crypto portfolios together with our membership. And it's been a great learning experience. But one thing we have learned right off the bat is Bitcoin. There are people out there that are trading it on a day-to-day basis and stuff, but we found that really for a sensible investor, and that, not to say that people aren't sensible, but for a very calm, sensible, organized investor, it's better to just buy and hold. Pick your points to buy, right? We just had about a 2-week period where you could buy Bitcoin as low as 47,000. It's back up to that 56,000 right now. Ethereum, right? We even were talking about this in our live room this morning, how for about the last 3 months, all people have been saying is, yeah, you got to get some Ethereum. You got to get some Ethereum. You got to get some Ethereum. And the price was just stuck. Remember, for a long time, it was stuck at that $1,600 level. Boom, it's 2,700 now. That's about a little over $1,000 more. Again, if you had just bought and held instead of trying to trade around getting crazy, you would have got either your interest in your staking fees to help like dividends, right? Build your portfolio without doing anything, putting any money into it. You would have done real well. I'm not sure how you would have done trying to trade that madness though. But again, have a plan and be smart about it. Other than that, guys, look, like I always say, if you want to trade with people that are traders that actually do trade, don't just fire out some picks and stuff. And if you want somebody you can talk to and all that, click that link below. Other than that, guys, you guys have a great weekend. Okay, it was a fun week. It was not a profitable week for us. We had that Apple trade. We did do that Visa trade early in the week, and we had a little Microsoft trade we did, which was a winner. But our big system trade was that Apple trade, and that went bust. We got about 45-50% back of our money, but you know what I mean? That's not why you trade. But this spider trade looks like it might turn that frown upside down. Either way, guys, look, it is the weekend. When the bell rings, shut it down. Go enjoy your weekend. Go fiddle with some Bitcoin. Go watch some, what's on right now? Baseball, basketball, whatever you're into. Get out, go to the park. It's been a long time since you could freely go to the park. The CDC just came out with the big mask update where now they're not recommending the mask on the outdoors. So you can actually breathe out there. Look, guys, like I said, other than that, let's cap off the week here. We're on this nice spider trade, which looks like it's going to be nice and profitable. Before we do go, let's share a screen. Let's pop on over and let's see what the market looks like. Let's do a little refresh here. And you can see that S&P is just kind of stuck now about that 41.8. Dow it bounced a little bit since we started this video, right? It was down about 250. It's picked up maybe about 15 points. Other than that, your trigger, we've talked about it before. Your trigger that this selling is serious and might be prolonged is always your VIX, and your VIX, you're looking for that 20 level. As long as it's trading, even if it's up like it is today, it shows there's some day volatility. When it gets over that 20, that kind of indicates that there might be some extended volatility in there. So really no danger zone. It's just a soft market, and it's a lethargic market this morning, probably because everybody's like us getting ready for the weekend. So without further ado, guys, let's check Bitcoin for you crypto nuts. Yeah, you see it's up $4,000 now. Jesus Christ, Louise. And you see that Ethereum, it's holding that 2,700. The big talk, of course, is Ripple, right? Ripple is going public, and they're having a big fight with I guess it's Congress or whoever. Let's see if I can find the article down here. You know, this is an interesting one too. You see Robinhood deepened ties with JP Morgan by using bank for money transfers ahead of expected IPO. It's funny, right? Robinhood was the pariah, right? With all JP Morgan and all them when that GameStop thing was happening. But now all of a sudden they're in bed together. When JP Morgan can pimp them and make some money off them, all of a sudden it's all okay. Money changes everything in the financial markets. It makes bedmates. But yeah, I thought I could find that article. But you know what, guys, let's call it a week. Let's get off screen sharing here. So let's call it a week. It's Friday after. We're rolling into lunch. We're about 12 minutes from lunch, New York. We're just watching our spider trade. Other than that, we're not doing a whole lot. We're waiting for the bell so we can start our weekend, and you should be doing the same. If you're not in any active trades, just call it a day and call it a week and go enjoy your weekend. The market will be there when you get back on Monday, right? We don't sacrifice our life for our trading. Our trading complements our life, okay? And if it's not doing that, if you find yourself tearing out your hair, sweating down your brow, watching every tick of a chart, chewing your fingernails to the bone, click that link below, all right? There's a better way to do it. All right, guys, have a great weekend.